Hello everyone, I'm Chetan Pratyal from ASC Group. I'm here to guide you on how to set up a company abroad while navigating the latest regulation related to overseas direct investment, commonly known as ODI. In this video, we will cover who is eligible for ODI, the process of setting up entity, compliance requirement, and some expert tips to smooth your global journey. To begin, let's understand who is eligible to invest. Indian companies, LLPs, partnership firms, legally registered in India, can make overseas investment up to cap of 400% of net worth on total financial income. Individuals can invest under LR scheme up to $250,000 per year. Moving on, the process of setting up an overseas entity. First, you need to choose your investment structure. You can either opt wholly owned subsidiary company where you will be having the entire stake, and a joint venture where you collaborate with foreign partners, holding the partial stake in the venture, sharing resources, and enjoying the local market access. Once the structure is finalized, you will be required to prepare a business plan covering goals, structure of the entity, capital requirement, and projections for successful business. You will then proceed with the filing for the required documents with the relevant authorities for setting up the entity following the jurisdictional laws. Once the entity is established, you will need to obtain a necessary state-specific registrations, likewise tax or labor and trade licenses to ensure the commencement of operations in the foreign country. Also prioritize initial RBI reporting by way of filing ODI forms along with supporting documents to your AD bank, followed by annual reporting by way of filing form FLA, also known as Foreign Liabilities and Asset Return, and APR, also known as Annual Performance Report. Lastly, open a foreign bank account and ensure all the transactions comply with the regulations issued by RBI time to time. Here are some important tips to streamline your overseas venture. Each country has its own set of laws, so it's important to seek expert legal and regulatory advice to keep your business up to date. Second one, understand your taxation structure and the leverage of double taxation avoidance agreement to minimize your taxation liabilities. Third one, when you are choosing the joint venture as an option, it is important to have a well-drafted legal agreement that covers aspects such as profit sharing ratio, the dispute mechanism, and exit strategies. Thank you for expert guidance. Feel free to reach out to us at ASC Group. Wishing you all the best for your global journey.